Hi, I'm Carrie Hunt, NAFCU's SVP of Government Affairs and General Counsel. I'm here today with Brad Thaler and Jillian Pevo. Brad is our VP of Legislative Affairs and Jillian is our Director of Legislative Affairs. Brad is just back from the White House. Jillian is just back from the Hill, and they have been meeting today on GSEs, Government-Sponsored Enterprises. If you read NAFCU today, you must have seen lots of different stories on government-sponsored enterprise reform. And today we want to take a few minutes and talk about that, talk about housing reform, a little bit about where we think we're going to go and what credit unions can expect in the next couple of months. So Brad, why don't you start off and giving us a little bit of an overview of where we are right now.
All right, thank you, Carrie. As Carrie mentioned, NAFCU's been participating in a series of meetings with the White House staff, along with HUD and Treasury Department staff, discussing the future of housing finance reform, and in particular, the legislation proposed by Senate Banking Committee Chairman Tim Johnson and Ranking Member Mike Crapo, called the Johnson-Crapo Discussion Draft. That legislation would wind down the two GSEs, Fannie Mae and Freddie Mac, and move to a new system where there would be a mutual entity established for small lenders to join, a common securitization platform for all lenders to be able to take mortgages, to package them for the secondary market, and a new regulator of the mortgage system called the FMIC, Federal Mortgage Insurance Corporation, that would package and put a government guarantee on mortgages to sell in the secondary market. So essentially create a whole new secondary market system for selling mortgages for financial institutions.
So Brad, why do we need a whole new system? What I've been hearing from our members is that certainly currently under, as we have Fannie and Freddie in conservatorship since the beginning of the financial crisis, the system seems to work right now. There's been some equalization of pricing. Credit unions certainly seem to have access. There certainly, of course, are always some issues, and we, of course, work to resolve those. But why does Congress strongly feel that we need something new?
Well, that's a good question, Carrie. When Congress tackled the financial reform back in 2009 and 2010, the one area they did not tackle was housing finance reform. Many folks look at the housing finance sector as the last big area of financial reform that is yet to be addressed. So the debate has been going on in Congress is what the future of housing finance should look like post the Great Recession. And you've led to a series of proposals from members of Congress. As I said, the main one getting attention right now is the Johnson-Crapo discussion draft on what the future system should look like. Their proposal, as I mentioned, would wind down the current system and establish a new system. But there's still a lot of debate out there on whether or not that is the right way to go, or if there may be other approaches as well.
Because currently there's still this sentiment that Fannie and Freddie can't stay up in conservatorship forever. It's been, 6-8 years now that they've been in conservatorship? Is that why we're still having some of these discussions?
Yes, there's right now Fannie and Freddie are in conservatorship. They're trying to find a way out of conservatorship. But right now, Fannie and Freddie continue to make the government money and continue to have a positive return to the U.S. Treasury. So they've been a cash cow for the government, but folks realize the current system can't go on forever. So the debate is really, what do you do to bring them out of conservatorship to either stand them up again or create a whole new system where you've changed Fannie and Freddie. There's a lot of political pressure because Fannie and Freddie have been, whether correctly or not, put a lot of the blame for the housing crisis that occurred. So a lot of members of Congress basically want to get rid of them and move forward, but there's a lot of debate on whether or not that's the best path.
So a lot of the recent discussion has been on the Senate side. What about the House side? I know, Jillian, you've been focusing a lot on that.
I have. Last July, NAFCU actually had the opportunity to testify before the House Financial Services Committee on Chairman Jeb Hensarling's bill, the PATH Act. While the bill really has a lot of positives, addresses some of the mortgage rules promulgated by the CFPB, including the definition of qualified mortgage, which of course we have concerns about. The bill, in terms of impacting the secondary mortgage market, really moves to a purely private system. So there would be no path to a government guarantee on mortgage-backed securities, which of course small lenders, including credit unions and our members, have a lot of concerns about. So the PATH Act passed the House Financial Services Committee on a party line vote and is pending additional consideration on the House floor. And I think what happens in the Senate Banking Committee, and if the Johnson-Crapo draft makes it to the Senate floor, could largely drive what happens with the PATH Act in the House.
And speaking of that bill, we have a markup on April 29. Is that correct?
Yeah, that's correct, Carrie. The Johnson-Crapo legislation is getting a lot of the attention because it is a bipartisan package that's based on the work of a bipartisan group of senators on the committee led by Senators Bob Corker and Mark Warner. Chairman Johnson and Ranking Member Crapo have taken their work and developed further on it into their discussion draft legislation with a coalition of senators from the committee giving them a bipartisan majority. Currently they have a markup scheduled for April 29th where they hope to move the bill forward. There is some discussion that markup could slip back a week or two as the committee staff works to try to address concerns expressed from industry and from others who are following this legislation, likely in some form of manager's amendment to bring to the committee to try and move the bill forward.
Now, we've expressed concerns with the legislation and given some suggestions. The committee has been very open and has met with us multiple times. For NAFCU, our key concern for credit unions are access to the secondary market and access that's guaranteed, and access that doesn't come at a cost that makes it really impossible for us to do business with whatever form the GSEs will take ultimately. And we expressed those concerns to the committee. We also did that in conjunction with CUNA and with ICBA as well. So we really come at it from a small lender perspective. And has the committee been receptive to hearing our concerns, do you think?
Yes, I think they appreciate the fact that small lenders have gotten together to express the concerns. As Carrie mentioned, we've shared them with the committee, we've shared them with the administration, and they're getting input from a number of groups across the spectrum, as I said, trying to figure out a way to move forward with it. Right now, the Johnson-Crapo draft is the one that's got the bipartisan support and attention, so there's a lot of focus on can amendments be made to the discussion draft that can get the support not only to pass the committee but to ultimately bring it to the floor. And there's a lot of question of what the vote total will be in committee and whether or not they'd even get time to get on the Senate floor this year. For, as folks know, 2014 is an election year, and that means politics often plays a big role on issues on the Senate floor.
So a lot still to be decided on housing finance reform. It could be quite some time before we see some resolution. For now, Fannie and Freddie appear to be continuing to work, but certainly if you have concerns, let us know. We will express those to the enterprises. We meet regularly with FHFA and others, and we'll be happy to do that. NAFCU strongly supports making sure that any transition relative to housing finance reform is at the least cost to our members. That's of utmost concern to us, and we want to make sure that any transition to a new system, if that's where we end up, is done extremely smoothly so that credit unions can do what they do best, and that's lend to their members. Any last thoughts, Jillian or Brad?
I don't think so.
Thank you for joining us for our little discussion on GSEs. We hope that you find this helpful, and as always, have a great day.